for my case, I haven't seen kind of a really good kind of risk reward for Ethereum because it's still, it's changing the underlying, mechanism for how the protocol works. They're shifting from proof of work to proof of stake. They're changing their monetary policy. They're potentially sharding it where they have multiple parallel chains that are kind of linked to a beacon chain. But then now they're doing roll-ups, and there's all sorts of different scaling mechanisms because they are running into their throughput limit. And so, basically I was just trying to highlight to people that sure, it could be a healthy ecosystem, it could take off, but you have to understand the risks there. It's not kind of this more finished product, it's more of this experimental product. And I just didn't want people to kind of, go into an alt season without understanding the risks they get into when they try to trade all of these non-Bitcoin protocols. I think that utility protocols in some way are going to be here for a while. The stablecoin usage will probably increase over time. There will be kind of, different sort of smart contract applications that will likely be here in some form. And then the question is which ones will stick around, whether or not their tokens will achieve some sort of moneyness, right? So will they kind of be viewed as money, or will they be viewed more like a commodity? And so I kind of just explored that question. If you look at, the whole digital asset kind of ecosystem, Bitcoin is head and shoulders over any other token that's trying to be money. Most of those other ones are in some cases less than 1% of Bitcoin's market capitalization. Sometimes they're, say, 1.5%. They're all kind of a very, very tiny percentage of the security, the distribution, whatever kind of network effect you want to use to measure that. The only other kind of asset that's in the same ballpark would be Ethereum. Its market capitalization is sizable, it's still notably lower. Any sort of kind of network effect has that kind of circular notion where the more people use it, the better it does. My point with Ethereum is that it's highly used for leverage and kind of these shorter term bets. And so, for example, if you look at what's all the money that's locked in DeFi, for example, a lot of that is you have decentralized exchanges, and so that's its own thing. Then you have liquidity or leverage providers for those exchanges. And so some people can deposit stable coins, for example, and collect interest on them. And the other side of that is they're basically borrowing stable coins at a pretty high interest rate, and then some of them could be using that for life expenses, but many of them are using it to speculate on different sorts of tokens, using that as their to have a leverage play on different sort of tokens. And especially because some of those tokens are lower market capitalization altcoins, it's got a substantial amount of risk and speculation. And so when you're in that bull market, you can see the amount of leverage builds up. The amount of kind of the yields can be high. It's this attractive situation. But if that were to turn down into a kind of an alt season, the opposite of that, a bear market in alts, that's where some of that leverage could become very painful. Back in the previous bull run, Ethereum outperformed to the upside and then underperformed to the downside on the other direction. And we'll see if that happens again, or every cycle kind of is going to have its own unique characteristics. Well, I point out that 80-20, 90-10, or 100-0 all make sense to me. And my preference is to focus on Bitcoin at this time. I think the risk reward is good there. Now, during a bull run, that doesn't mean I think that Bitcoin will be the best performing of these assets. I mean, generally there will be various alts, perhaps Ethereum itself, that outperform Bitcoin to the upside, kind of like what we saw in 2020, where, for example, Ethereum outperformed Bitcoin. And so I even said in the article that if it goes over 1400 decisively, I wouldn't be surprised to see, some pretty bullish action on Ethereum's price. The question is more about the long-term value of that project, and if they're going to successfully navigate some of those transitions from Ethereum 1.0 to Ethereum 2.0. It's kind of like changing the engine of a car while you're running it. So it's a very complex challenge to do. And so the risk reward is to me some extent less attractive. Value settled on Ethereum has eclipsed Bitcoin because it's used for those stable coins, so it's used for its velocity is far higher, and therefore it's used for that. The past 3 years, Ethereum's settlement volume went up dramatically and even outpaced Bitcoin, whereas its market capitalization has not caught up to that same degree. And so if you're looking at it from the Ethereum bullish side, you say, well, that's because Ethereum's undervalued and Ethereum's going to catch up and it's going to, outperform. But if you're looking at it from that John Pfeffer view, you're saying, no, that's to be expected because it's, the tokens aren't money to the same degree that, say, Bitcoin is. And so the ecosystem can grow a lot faster than the per token value because there's higher velocity in the system. And the Ethereum counter argument to that is that the combination of staking, if they get Ethereum 2.0 working, that's basically a liquidity sink. That's an incentive to hodl for them to earn yield. And two, that Ethereum can be used as collateral in these DeFi or these different sort of markets, and that those would be sufficient liquidity sinks to basically monetize Ethereum. We're seeing this competition between utility protocols at a time when Ethereum's kind of changing itself substantially. And so I think there's certainly upside potential there, but there's also a lot of risk because unlike Bitcoin, that's it's mostly a steady state project that's just getting security and privacy updates over time, whereas Ethereum is still a rapidly evolving system. It's more of like a tech stock than like a money at the moment.